As you may know, Warren Buffett is notorious for guiding his massive conglomerate Berkshire Hathaway by the core principles of boring, old, and reliable value investing. For this reason, this past month, many people were shocked to read that Berkshire is planning on investing into Snowflake, a tech company IPOing in the coming months under the symbol SNOW. This move goes against almost every investing principle Warren has pushed in the last 30 years. Under his leadership, the business has a long history of buying excellent companies at a fair price, a steady and usually boring way of growing your portfolio. For the most part, with the rather large exception of Apple and Amazon, Berkshire has stayed away from fast-growing tech stocks. Even in this clip from the 2019 annual shareholders meeting, it's very apparent that both Charlie Munger and Warren Buffett are not fans of tech companies.
I'm wondering about your interest in not just Apple, but all of the tech stocks like Amazon and Google, because you've avoided them, you've stated in the past, because they're complicated, you should stick with something you understand.
Well, we certainly look at them, and we don't think of whether we should be in tech companies or not, or that sort of thing. We are looking for things where we do get into the durability of the competitive advantage, and whether we think that our opinion might be better than other people's opinion. I didn't go into Apple because it was a tech stock in the least. I went into Apple because I came to certain conclusions about both the intelligence with the capital would be employed, but more important, about the value of an ecosystem and how permanent that ecosystem could be and what the threats were to it and a whole bunch of things. And I don't think that required me to take apart an iPhone or something and figure out what all the components were or anything. It's much more the nature of consumer behavior.
We were not ideally located to be high-tech wizards. How many people of our age quickly mastered Google? I've been to Google headquarters. They look at me like it looks like a kindergarten.
On top of this, Warren has stated many times that he also hates IPOs, literally never investing in them. In this clip, also from 2019, Warren and Charlie discuss how Berkshire Hathaway has never bought into any IPO in over 50 years of the company's history.
There are a bunch of new technology IPOs that are slated to come to market this year. I think back to what you thought about the tech IPOs back in 1999 and not wanting to be near them. These are a little different. A lot of these actually have earnings. You think of an Airbnb, you think of a Pinterest or something along these lines. Is this different? How do you value this stuff?
No, yeah, but the big ones have losses, and some of them report earnings differently than I would report earnings. I mean, we haven't bought IPOs, and if you think about it, you've got a whole bunch of people on the other side who have an interest in marking up each stage of it, even if it's phony. Sometimes they offer one price for the employees that already have the shares, but then they have an artificial price so they can say that this round went at a higher price. They're picking the time to sell to you. I like it when I'm picking the time to buy in a 2008 rather than having them pick the time when they've decided this is the time we can cash in by selling to you. We're going to do you a big favor and let you buy in. So I have never been a big fan of IPOs, and the valuations are kind of staggering now on some.
So why would Warren suddenly decide to invest into a relatively small cloud-based data warehousing startup that was founded in 2012? Well, in today's video, we answer that question by investigating the details. In nearly all of Berkshire deals, there's a special condition that's usually negotiated beforehand. As of today, we know that Berkshire has agreed to purchase $250 million worth of Class A stock in the IPO, joined by a Salesforce subsidiary also purchasing $250 million as well. In addition, Berkshire has agreed to buy 4 million Class A common units from existing shareholders in the business at IPO price. Collectively, this could result in a total price of $573 million, assuming an $80 per share estimate. Fundamentally, this move makes little to no sense as the business historically has only lost money and is certainly overvalued with such a large market cap. Sure, it has explosive growth numbers, but given the investing history of Berkshire, a company that does not produce a profit is almost never included in their vast and powerful portfolio. In the first 2 quarters of the most recent fiscal year, revenue has come out to $241 million. This is more than double the $104 million seen at the same time last year. In the fiscal year ending in January 2019, sales were just $96 million. They have surged in the latest completed fiscal year to $264 million. These numbers do in fact display powerful growth, but ultimately profits have not been up to par. Without a doubt, the largest tailwind to the company is its surging customer count. At the end of its latest fiscal year, the firm had 2,300 clients. This is up from 948 a year earlier. Total customer count today is closer to 3,000, up from 1,500 a year ago. In the month of July this year, the large user base had a significant impact on Snowflake's activity. The firm reported 507 million daily queries during the month. This is nearly double the 254 million seen in July of 2019. Such rapid growth, combined with how quickly the company is approaching operating cash flow break-even, is encouraging. Without any doubt, the company is an interesting prospect. It has that rare quality of being both tech-oriented and vetted by Berkshire. Obviously, as the world becomes more digital in nature, data will hold more and more importance in our lives, and Berkshire and Salesforce probably both see this as a play on the growth of data in the global economy. The fundamentals may not all be there, but truthfully, we will likely never get a good, detailed explanation on why Berkshire decided to invest in Snowflake. As per usual, Warren's statements in the future will likely be blurry and non-specific. Judging by history, however, any company vetted by Berkshire is usually a good bet, and if Snowflake is being bought at IPO by Mr. Buffett, you can bet that I and millions of others will be there to join him. Thank you guys for watching. Please make sure you hit that subscribe button if you enjoyed, and let me know what you think about this unusual Berkshire play in 2020.